Hello and welcome to this special show. As this 2022 year winds down and we get into 2023, I reckon you will hear a lot of investment advice, what you should be doing in the new year, what you should not be doing, what to buy, what to avoid, etc., etc. And that would be par for the course. But I reckon there are a few people you actually should listen to when thinking about investment aims, investment objectives, and what to do. I'm with one such person, needs no introduction actually. S. Naren is Chief Investment Officer at ICICI Prudential Asset Management Company. Naren, great to have you with us here. Thank you so much.
Hi.
It's been an incredible year, 2022, right? Retail flows it's really transformed the market. It's supported the market, of course, against all of the foreign selling. So I call this a bit of an incredible streak. Will this continue into 2023?
I think it will, but I would have never imagined that $30 billion of FII selling, which is more than 2.5 lakh crores, and Indian markets end positive. Yeah. I would have never imagined, and it's really the power of domestic buying which really kept the market afloat. Going back in June, when the market was much lower, I would have never thought that markets will stage a 20% rally from that low, and it was primarily due to powerful local buying.
Yeah.
So I think it's been an incredible year. Although what we thought at the beginning of the year turned out to be right, that we will have a volatile year and it's difficult to make big money in the year. So that part of it turned out to be right, but what we couldn't predict is from the middle of the year, there'll be such a
From the June
rally.
lows, I mean, it's been a powerful rally. Are flows continuing? I mean, you have a bird's eye view. You're sitting atop one of the largest sort of fund houses in the country, if not the largest. Are flows still very strong, retail flows into the market?
I think the SIP flows are extremely strong. And what's different, if you ask me, at the start of 2023 is, if you go back the last 2 years, interest rates were very low.
Right.
So people said, why should I invest in debt?
Right.
But if you go back and think where we are today, interest rates are much higher.
Right.
So what you get in an overnight fund is almost 6% and higher.
Correct.
So interest rates are much higher. So people are thinking, should I allocate to debt?
Right.
And should I allocate to equity? Or should I allocate to both?
Right.
And this is a question anywhere in the world people are asking, because they're used to 13 years of zero rates everywhere in the world.
Correct.
So I think the picture is more mixed on flows.
Right.
It's not that the flows are bad.
Correct.
Flows are still good.
Correct.
The SIP flows are outstanding.
But some of that equity flow is also going into debt instruments, etc.
Yeah, I think the non-SIP flows are likely to go partially to debt, because debt has become an outstanding asset class.
Is that what is happening in the last 2 months, the mutual fund data that we get, right? The SIP number is at all-time high, but the discretionary, non-SIP number actually is not looking good, right?
It's logical. It's logical that people will also consider debt, because if you're going to get much better returns on debt than you were getting 2 years back or 1 year back, why wouldn't people consider debt?
But it is going into financial products. I mean, it's not as if that money is not coming into...
Yes.
It's getting invested, not in equity, but in...
Yes, clearly. If you look at the last month, what we saw was that debt index fund have received huge inflows, and that's something which possibly as a product didn't exist 2 years back. So I think clearly we are seeing a situation where people will consider debt and SIP, both, and that will be the change which we will see in 2023.
Okay, I always, you've always been actually one of the very few true value investors. You've been very contrarian as well, and to be contrarian while managing such a large amount of money, to take those calls and make them public, I mean, I think it takes a lot of courage and conviction. So what's the big call for 2023? Is there a big call, Naren? Or as you said, it's more mixed and muddled as we start the year?
No, I think the big call will be that inflation will become much smaller as an issue in 2023.
Okay.
And therefore, we are in a situation where multi-assets become very interesting, that you consider all the asset classes. You consider a product like multi-asset, which can invest in debt, equity, gold, silver, REIT, InvIT. You can do everything. Because I think that kind of an asset will become much, much more interesting, because you're still going to have a volatile year ahead. Because growth in every part of the world is going to slow down. You're not going to see a situation where maybe inflation will become less of a problem. Doesn't mean interest rates fall. Interest rates will stop going up. They'll stabilize. Whether they're going to crash, I don't think so. We have had the money printing process in both US and Europe end. Now Japan may also stop their money printing.
Right.
So you have a situation where money printing has stopped. So I think we are in a year where inflation will cease to be an issue, but growth will become an issue at least till some
I know
point of
you
time.
have slightly bigger macro calls as well. The Fed funds rate is the big one, which sets rates everywhere, right? Where will that be through the course of 23, you think?
See, I think it will settle at some level, near 5.
Near 5?
Near 5.
Okay.
But that's not the big issue. The issue is that growth will slow down.
Okay.
And growth slowing down means that you will have a situation where equity markets will be volatile in all parts of the world,
Okay.
which goes back to our most structural call for a long time, which is asset allocation.
Okay.
So I think that's
But will growth slow down enough to cause a earnings recession? Because, last, I think, 15 years, we've had, whenever there has been a recession, it's been deflationary, right? 2008 was a case in point. Earnings compressed quite a bit. Or do you think it's possible we get a slowdown, a recession, but not deflationary in nature? I mean, it's still a little bit of inflation is there, so nominal earnings will not fall that much. What's your sense?
Yeah, I'm saying that if you have a market which trades at 20 times earnings, you don't need earnings to fall. If you have earnings falling substantially, then you have a crisis.
Right.
You can have a slowdown in earnings growth.
No, we're talking about India or the US now?
In India.
In India, okay.
I think that's the challenge in India. That
Right.
we are not trading cheap in India.
Correct.
So you don't need earnings to fall.
We need earnings to grow.
You need earnings to grow. If the growth in earnings slow down significantly, that itself would be a problem at the kind of valuations we are in India.
Okay.
So that can happen.
FY23, I was looking at numbers. 23 full year estimates have already been pulled back to about, I think, 8-9% now, right?
Yeah, but still we are all counting on reasonable earnings growth for 24.
So what do you think? It'll have to come off?
It depends. We'll have to see how the global environment is. Because see, oil falling in the last 1 month is a powerful positive.
Right.
So if oil keeps falling, that's a very powerful macro positive for India.
Right.
So if you had oil at 100 and if you have oil at 80 or if you have oil at 60 and if you have along with that coal prices falling, all these things are very powerful positives for India. I think we have to look at what happens to energy prices. 2022 was a problem also because energy prices went up substantially.
Right.
So if energy prices fall, I think that would be a very good positive for India, and that's not yet factored in.
And do you have a call there? Oil, I know you mean,
We have never gone right.
But what's your bias? I mean,
The bias is that it doesn't fall, but maybe it never will go to the problems of 2022.
Okay.
But I don't think it looks like energy prices can crash.
Okay.
That's how, because 2022 was marked by another big thing, that you had big China COVID.
Right.
Now China is saying we are going to stop COVID and we are now going to go back to normal situation.
Right.
In that situation, can energy prices crash?
Right.
That's a question we are asking ourselves.
Right.
So I think maybe oil won't go back to 120.
Right.
Oil may not go down to 60. Oil will be range bound.
Right.
And along with that, all the other energy prices will be range bound, which is an okay environment, but not the extremely great environment.
Since you brought up China, let me just finish that point on China. I mean, 22 has been also marked by this debate that, a lot of investors, both FII, portfolio and FDI, will look at India because China has gone through a lot of trouble and people have lost trust maybe, etc. As China reopens, you think that introduces competition once again for both flows and investments into the country?
I think there are two ways to look at it. One is emerging market as a class also suffered.
Correct.
In 2022. I think emerging market as a class will come back.
Okay.
I don't think we are in that situation where we have to worry about emerging market as an asset class.
Correct.
China will come back. Emerging markets will come back. Will China be completely out of favor all the time like they were in 2022? May not be.
Correct.
So I think emerging markets may get flows.
Right.
Dollar may have peaked.
Right.
So we are in a much better environment for emerging markets.
Right.
Within that, can China be completely dumped? I don't think so.
Right.
So I think we are in a better environment for emerging market. So that's how we see it.
So in a way, if dollar is, as you said, peaked, maybe it's already peaked, right?
Yeah.
You think it has peaked?
I think dollar has peaked.
Oh, and that is great news for emerging markets, right?
Yes.
Emerging market flows,
yes,
etc.
yes.
So 23 could see return of foreign flows in a big way?
See, but if you have growth slowing down everywhere in the world,
Right.
is that a very good environment for equity? That is the question we are not able to answer.
So what is the right asset allocation, Naren, if I can ask you that right
There
now?
is no such right answer. Is equity
Broadly, in the
cheap?
ballpark,
Is
I mean,
equity
what's your-
cheap? The answer is no.
Right.
Is gold likely to do well? Yes, as soon as Fed does a pivot. When will Fed do a pivot? Sometime during the year.
Right.
Is debt, short-term debt attractive? Getting more and more attractive.
Right.
So we are in a situation where equities is still not cheap.
Right. We'll take a quick commercial break right now, and we'll come back and we'll get into sectors, right? I mean, within equity, what is Naren really doing? Where is he overweight? Where is he underweight? And what does he want you to do? We're back.